This week, Facebook issues a warning. Apple's new operating system will make it harder to track people. Plus, the economic toll of the coronavirus is rising as a slew of companies announce furloughs and job cuts. And finally, with both conventions now behind us, it's full speed ahead to the presidential election in November. And we've got some exclusive data about what Wall Street execs are predicting. I'm Mackenzie Sagalos, and this is CNBC After Hours. We'll start with a look at Wall Street's week. And to borrow some finance jargon, the bulls were certainly in charge. All three major indices posting solid weekly gains. Both the NASDAQ and S&P 500 closed the week at record levels. And by the end of today's trading session, the Dow has fully erased all of its 2020 losses and is now about 0.5% higher than it was on New Year's Day. With one trading day left in the month, the Dow and S&P 500 are on pace to lock in their best August performances in more than 3 decades, since 1984. The seemingly unstoppable stock market action inevitably sparks questions about how long a rally like this can last. After all, there's a serious and legitimate concern about a second wave of COVID-19 infections in the fall, which could once again bring the economy to its knees. And we're also 67 days away from a presidential election, one which could have serious economic consequences. So what does Wall Street think right now about the election? Our own Frank Holland has fresh quarterly data from the CNBC Global CFO Survey. He can break down what the C-suite is predicting about who will win the White House and where the markets are headed.
75% of global CFOs believe Joe Biden will win the U.S. presidential election and replace President Donald Trump in the White House, a dramatic change from last quarter when the survey was taken between May 14th and May 28th. The CFOs almost split down the middle then, giving Biden a slight edge. The CFOs are also basically split on the congressional elections as well, with 52.5% of CFOs saying Republicans will retain control of the Senate and Democrats retain control of the House. Nearly a third believe Democrats will gain control of the Senate and the House. Only 5% believe Republicans will get control of both. Today, the 10-year yield, it stands at just about less than 0.75% near historic all-time lows. 45% of CFOs say they see those yields staying in the same range between 0.5% and 0.75% at the end of 2020. 20% believe it will fall lower between 0.25% and 0.5%. The Dow Jones is now 3.5% from its all-time high. More than a quarter believe it will continue to go higher and top 30,000. However, 42% say it will fall below 25,000 first. During the pandemic, we've seen a changing M&A environment. Boeing and Xerox, they abandoned bids, while Google Cloud and BlackRock say they're open to M&A despite uncertainty. Microsoft and Oracle are also making a lot of news, reportedly pursuing TikTok. Half of global CFOs, they say the current environment is a fertile ground for deal making, but 40% say the uncertainty is making it very difficult right now to make deals.
And now let's get to our sound check. Here's a timeline of this week in business told in just a few sound bites.
This is a big thing that he had pushed as far back as 2 years ago. When I did that interview, if you recall, he talked about the threat of China. That was one of his first big talking points, is that we need to have Facebook as big as it is because China is such a threat. I called it the she or me defense, but it's not a really good defense.
There'll be more certainty. There'll be greater opportunity. People like me who run businesses, we make investments. We hire more people when we're confident about what's coming in the future.
A Zoom world is an okay transition, but people like to be together. They like to work together. I don't think everyone will work from home all the time. I think, in fact, we will return. It will take a few years. New York has been through many such scenarios, and New York will return as well.
So we've been in discussions with them for several months. We're delighted they've reached a decision. I don't believe this was a rushed decision or a pressured decision because they've been rather methodical and, looking at the data over several months. And so I don't see this as a rushed decision.
We anticipated that this pandemic was going to have really a slow return to normal. But with the second wave of, several states shutting down, we did see some increased business on and across most of our categories, notably coffee with our Folgers brand, Jif peanut butter, and our Uncrustables peanut butter and jelly sandwich continues to be on fire.
We think we're incredibly well positioned as a brand. The consumer's looking for comfort, they're looking for value, they're looking for easy on and off, and they're looking for a shoe that can be fun and personalized.
Our revised statement emphasizes that maximum employment is a broad-based and inclusive goal. This change reflects our appreciation for the benefits of a strong labor market, particularly for many in low and moderate income communities.
You might be frustrated that the games were stopped yesterday, that the games weren't played. Maybe it makes you listen, and maybe it makes you understand from a different light what these athletes and these players are feeling.
This election will decide whether we save the American dream or whether we allow a socialist agenda to demolish our cherished destiny.
Walmart's certainly interesting. For us, we've been really focused recently on rolling out some e-commerce features. We've been providing that for our creator community as another way for them to earn a livelihood.
All right, shifting gears to Facebook, which finds itself in a bit of trouble. No, we're not talking about Facebook's failure to quickly take down the page of a self-proclaimed militia group in Kenosha, Wisconsin, after it issued a, quote, call to arms ahead of a deadly shooting in that city. And we're also not talking about the reported employee backlash inside the tech firm over the proliferation of conspiracy theories across its platform. Actually, Facebook is in more than one tough spot right now. But the one we're talking about is the company's chilly relationship with fellow tech giant Apple. This week, Facebook warned investors and advertisers that Apple's newest and yet-to-launch operating system, iOS 14, will make it much harder for Facebook to track users as they use different apps on their phone, which in turn will hurt its ability to serve the ultra-targeted ads that its business is built on. CNBC.com's Salvador Rodriguez can explain the iOS changes and exactly how Facebook's business will be affected.
For the last couple of months, Facebook has been warning investors and their developer partners that upcoming changes to the latest version of iOS, just warning them that some of those changes is going to make it more difficult for Facebook to be able to target ads to mobile users on those devices. And specifically this week, Facebook highlighted that the Facebook Audience Network, which is essentially a plugin that mobile app developers can put into their apps to show ads on their apps, which are targeted using Facebook systems, that in particular is going to be hit. And in fact, Facebook said that it could take such a hit that Audience Network could simply become irrelevant on iOS. So essentially on the iPhone, there's a thing called the IDFA, which is essentially a number for your device. And previously, what developers could do is rely on that number to kind of get a sense of what apps and websites you're going to around the internet and get a sense of what type of things you're interested in and therefore what kind of ads might be relevant to you. But in iOS 14, the change that Apple is making is that going forward, users are going to have to opt into that. And usually when you have to choose to be in something, that friction makes it so that the number of folks who actually opt in is much more reduced. When it comes to Facebook, this is a company that is still, most quarters either 98 or 99% reliant on its advertising business. So advertising is Facebook's bread and butter. Last quarter, they brought in $18.32 billion in advertising, which is quite a bit. And so they're not particularly diversified. As for how much of that comes from Audience Network, the company doesn't really break it out as to which part of its of its advertising business contributes how much, but we would imagine that it's still, quite significant, especially considering just how many people are on iPhones.
Okay, time for our numbers round. This week, we're highlighting a string of job cuts coming out of corporate America as the U.S. economy still struggles to cope with the coronavirus pandemic. First up is 6,391. Delta, United, and American Airlines announced a combined 6,391 pilots would be furloughed starting October 1st, unless the federal government gives the industry another round of bailout money. American Airlines told CNBC that it expects to have 40,000 fewer employees than it had before the pandemic began. That's about a third of its entire company. The $2 trillion CARES Act provided $25 billion for the airlines to keep their employees on the payroll, but that money runs out at the end of September. Additional funds could come via a new stimulus bill, although talks are stalled on that front. But this week, the White House said Trump is looking at possible executive action to avoid job cuts in the airline industry. Next, 1,000. Cloud software company Salesforce announced that it's cutting 1,000 jobs, or about 2% of its staff. This comes even after the stock jumped 26% on Wednesday alone, following a blowout earnings report. That's the stock's best day ever. Salesforce said affected employees would have 60 days to find a new position within the company, so the number of employees who actually leave the business will likely be much lower. And finally, 4,000. Beverage brand Coca-Cola announced that it will offer voluntary layoffs for 4,000 of its U.S., Canadian, and Puerto Rican employees. The move is expected to total between $350 and $550 million in severance costs and is part of a larger restructuring plan that would cut the business's 17 divisions down to 9. Coca-Cola saw its second quarter earnings fall 33% in the wake of the coronavirus, and this latest move is part of the company's bid to avoid larger involuntary layoffs in the future. That's it for After Hours, but before we go, here's one thing to watch next week. The big splits are upon us. Apple and Tesla are each splitting their stock, which makes the price of an individual share much cheaper. And they both go into effect before trading begins on Monday. Get all the details on how Apple's split affects the Dow Jones Index and stay up to date with all the trading action by going to CNBC.com and downloading the CNBC app. We'll be back here next week in our home office on Tuesday and Thursday with new editions of After Hours, so be sure to catch us then.